Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 11th of February, 2023. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the third week of February. And across all these three major pairs, looks like the whole last week was basically just consolidation. There was some pullback, but in the end, all just stayed in a fairly tight range, especially the Euro. After a decisive fall the previous week with a significant retracement. And we'll compare that with the US dollar index as well. Let's begin with the Euro. And this range for the week is only about 120 pips or so. Started to continue its weakness on Monday and following the previous close for the week, and found support just below the 107 round figure and also just above the daily 55 EMA. So right into this support zone. Probably extend this slightly lower to the 55 EMA, which is at 106.50. Resistance, major resistance is still at the 110. And the next major support is going to be at the key round figure at 105, where the daily 200 EMA is coming up to settle around 105.18. And also the swing high is at the 104.81. Just below the 105 round figure. So we'll see if this week it's able to dip lower. It has to break below the daily 55 and perhaps target the daily 200 and the 105 range, 105 level. Otherwise, it needs to really climb back up above the 138 pip extension at 107.60 or 70 area to recover back its to continue its bullish move, but at the moment it's consolidating in a very tight range, so it needs to break out one way or the other. And let's also take a quick look at the weekly time frame, where after a shooting star the previous week, it has continued its bearish momentum lower. And coming up is also the weekly 55 EMA, which should correlate with close to the daily 200 EMA. So it's still bearish for the short term, but we'll see if it's going to extend its retracement lower. And this week there is no major news from the Eurozone, but the US has their CPI reading for the last month, so that's a key one that will impact the US dollar and will definitely also impact the major pairs as well. Okay. All right, so nothing much more to be said except it needs to break out from this range, and we'll see if the same happened with the US dollar index and whether it's also consolidating. And here's the US dollar index, the DXY. And right on Monday itself, it gapped up, just as the other pairs gapped down, gapped up and above the 103 and almost hitting the 62 Fib, which it finally hit on the Tuesday. 62 Fib retracement level, just under the daily 55 EMA, and then consolidated for the week in a very tight range, finding support from the 38 Fib retracement and settling around above the 50 Fib. So this intermediate resistance, let's move this up to the key resistance now. Support is still right here at the swing low. And well above that, that's the key resistance round figure level of 105. But for now, it needs to break through the daily 55 EMA if it's going to gain any ground. And then after that, it's got to contend with the daily 200 EMA around the 786 Fib retracement area. All right, and this Tuesday, there's the US CPI figure. We'll see if that's going to be a catalyst for a further boost in the US dollar, or whether it's just going to be a muted figure. The expectation is slightly lower than the previous month, about 6.2% compared to 6.5% the previous month. So they're hoping that its inflation is continuing to decline. Let's take a quick look on the weekly time frame, and it did gap up and then rose to hit the 62 Fib retracement as well as the weekly 55 EMA, and that's blocking the progress for now. But in the short term, it does look like it may continue to push through higher. And previously, this is also a swing high resistance area. We take a look on the monthly. Yeah, that's where this double top was before, and that's around 103.70 area. Okay, so it's also consolidating as with all the other pairs, except that it did gap up at the start of the week and then consolidated. So it could be just a pause, and we'll see where it's going to break out from. And this Tuesday's figure will be critical, along with PPI figure on Thursday as well. All right, so let's move back to the other major pairs, and let's take a look at the cable, where after dipping lower right into the 120 key support level, it did manage to recover, but did not go too far, was unable to close back above the daily 200 EMA. And Friday is settled back down lower, below the 21 Fib retracement. And that's also due to the University of Michigan sentiment figure, which came out stronger than expected. So that's why the major currencies dip lower on the Friday, and it could try to target the 120 support level again. And the next key support is at the 38Feb retracement at the 118.65 area. So that's still an intermediate support. Major support is at the 50Feb at the 116.85. Major resistance is still the same zone above the 162 Fib extension and the 125. So, but for now, it's unable to break back higher above the daily 55 and the daily 200 EMA. So that's a dynamic resistance that's blocking it. And this week, there's a jobs report from the UK, as well as later on the impact from the CPI, US CPI figure will create more volatility. But for now, it does look like this is a bear flag. And after Friday's dip lower, they could attempt to break through the support and target the 38Feb. And we'll see if it goes down lower, below that, because that's the a key neckline for this double top pattern here. Okay, let's move on to the Aussie dollar. And last Tuesday, the RBA did raise their interest rate by 0.25%, but it turned out to be a hawkish statement because they're possibly looking at a couple more rate hikes next in the following months in their statement. So after a dip below, right into the support zone on a Monday, there was a gap down below the 69 and hit the daily 200 and the confluence with the daily 55 EMA here as well. That's right into the support zone. It did climb back up after the RBA news and then was not able to break above the 70 round figure. That's a critical resistance there now. And next key support will be at this swing high at the 68 figure. So let's identify this as key resistance zone here. Okay, and this week there's also the Australian jobs report on Thursday. But before that, there's also the CPI data from US, which will create more volatility, and we'll see where it will drive the US dollar and the major pairs. So it's sitting close to the interim support. So that's the daily 55 and 200 here. So if that breaks, then 68 will be the next target. And if it's really bearish, and then it's going to target the next round figure at 67. But for now, I think 68 will hold. All right, so let's see how the US dollar index will move for next week. And how it will impact the other major pairs. Let's take a quick look at the weekly time frame for the Aussie dollar as well, and spinning top for the week. So it's just a pause, it's a critical pause now. Okay. Let's also take a quick look on the on the cable. The weekly time frame is also a spinning top. And we did take a look at the euro. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.